Peter Campbell here to introduce you to an indicator called SwingLevels. This is a extremely powerful tool, and there's a number of reasons that this is so powerful. One of them is that it operates in real time. The other is that it allows you to coordinate support and resistance levels based upon multiple time frame charts and match the same kinds of levels. So in other words, if I have a 60-minute chart and I want to get daily levels on that chart, there's a method that you can use to do that. Now, essentially what this is doing is it's giving you the ability to see that we achieved a swing high here, and you can indicate your swing highs by coloring the lines, for example, as white in this case, or light gray, and the swing lows as dark gray. Essentially, then it projects them forward. And what inherently happens is that as the market becomes, gets some congestion, like for example in this area, we know that this is an important area of support or resistance. And it's also good to know that this was a previous high, in real time. So what we'll do is we will center the prices, so I can show you this a little bit easier. Okay, so we see where our next resistance point is here, based upon the date range of data that we have. Now, I have 400 days in this chart, and probably what I should do is give this about 500. Now, the indicator itself gives you the ability to project prices, resistance levels from the past forward, but it also gives you the ability to use the indicator several times and use different settings for different time periods that you can project forward. And that's important because, if I look at, for example, the market, this is TF, if I look at the market over here, in a year ago or so, we may have had smaller swings, and therefore you want to use different settings to extract your support and resistance areas. So what this tool allows you to do is to divide your markets into date ranges, so you can say start processing on this date and end processing on this date. And what this is being set to at 1/1/1929 is basically ignored. It means that the start date and the end date equal the same. It is not going to even look at the start. It's going to apply the analysis to all the bars in the chart. What is going to happen if you wanted to say analyze the S&P 500 over the Russell 2000 from 2003 to 2006 using these settings, and then from 2006 to 2008 with these settings, and 2008 to current, you would use then some other settings. So essentially we're able to do that with this indicator and then project all those things forwards and then trigger alarms when trend lines are crossed. So that's what all this stuff is about. I'm not going to get in detail into the alarms. What I'm just going to do is show you, essentially that in real time, if we trigger a new support or resistance level, those levels will be drawn on the screen. And now let's go to a more significant chart, meaning that we're going to a 240-minute chart, and you can see the levels that this thing picked out for the Russell 2000 here. So basically picked out 509, 505 as a resistance and support zone, and that indeed was fairly important. And then now we have quite a bit of resistance and support up here. Now, this clustering is definitely something to be aware of, because this was a torture here for the whole month as we got to this level. And it's easy to see on a 240-minute chart, but it's not so easy to see if you were looking at something like a 60-minute chart. So what I wanted to do is to demonstrate that with this indicator you can actually duplicate the results that you have on a 240-minute chart or on a daily chart and project them onto a 60-minute chart or a 5-minute chart for that matter. And it's very simple to do. Basically, we go in and we look at the settings we used here for this chart, 24, 24. There's another method that I actually have that also means that we don't have to do any calculations. It literally transmits the resistance and support levels, but that's not what I'm showing you now. This is where in every chart everything would be actually calculated, not transmitted. But the strength that we're using to calculate these swings is going to be, these levels is 24 and 24. We're using no date ranges, everything is normal. So now we're using a chart that's 60 minutes. So in order to get the same levels on that chart, what we're going to do is basically take 24 and multiply it by 3. 24 and multiply it by 3. And what we get is the same exact levels that we have on that chart. And, they're displayed forward, carried forward for as long as we have the same amount of days in this chart. So we have 900 days in this chart. The other chart had 900 days, and therefore we have now all the same levels. So very, very powerful tool for you to be able to see where we have important resistance and support. And as you can see, one of the things that happens with these important support and resistance lines is that you tend to move, in almost one swoop, one kind of wave between each level. Now these are big levels, so that's not applying universally, but if you get a pretty granular view, you'll see that essentially you can create a situation where you know that if you break this, that you're going to go here, and you know that if you break back over this level, that you're going to go to this level. Those are things which are possible to do just by modifying the settings here. And you can change the color for the swing high and swing lows. You can change the amount of haircuts that you give to a swing high and a swing low. And you can do another thing which will plot your symmetry, and this will give you a trend and also help you to determine whether or not you're in chop. So essentially I'm going to plot that, and what you see here is that this is this direction of symmetry in the market. And so we essentially are seeing symmetrical levels up, and we're seeing a symmetrical market symmetry moving down, and now we see it moving up again, and we're above symmetry. Now how I use this to determine that I'm in chop is basically when I have symmetry moving up and price goes below that level indicated by the direction of symmetry, that is counter trend chop, usually consolidation. However, when we're below price, when symmetry is now pointing down, that may be a downtrend. And what we see here is that we got into a consolidation over here where price was vacillating over and underneath this downtrending symmetry. And then when we broke over that, we got positive symmetry for more up moves, and that's exactly where we are right now. So this is again another useful tool to help you to analyze where price symmetry is going, where we are in terms of price symmetry, and then where our support and resistance levels are going forward. And definitely much more advanced ways to look at this indicator, because it's very difficult to get levels. Like this, for example, the low levels that we hit in the Russell over at these periods were kinds of things where you'd have to go back maybe 10 years or 8 years in order to get those levels. So you can do that with this indicator. You just go find the settings that you want and apply them back. And with the very, very long-term charts like that, you'd probably want to use the other methods for transmitting the levels forward, which is essentially a transmission process instead of recalculation. But that requires another indicator which does the transmission and then does the re-rendering. So that's another subject for another time. I'll be back soon with another indicator.